Good day and welcome to the Sartorius and Sartorius Stead and Biotech conference call on the preliminary full year 2019 results. Today's conference is being recorded. At this time, I would like to turn the conference over to Dr. Joachim, Kreuzburg, CEO. Please go ahead, sir.
Thank you very much and welcome everybody to our today's call on the financial results for 2019, the preliminary results I should say, and also the guidance for the year 2020 for both the Sartorius Group as well as for Sartorius Stead and Biotech. I would like to kick off today's call by talking a little bit about the main highlights of financial 2019, and then I will hand over to Rainer Lehmann, our CFO. So the highlights last year clearly have been, first of all, that growth on all levels, sales revenues, order intake, as well as profit has been in the double-digit area. Particularly Bioprocess Solutions, again, has grown very nicely with a very strong momentum throughout the year across the board. We also have seen robust development overall in lab products and services, we believe. We are happy being able to report on the closing of the acquisition of Biological Industries, the Israeli and cell culture media specialist. And as you probably all know, we have signed an agreement to acquire select life science business from Danaher around end of October last year. And we'll give a little bit of outlook on that as well. And overall, we also have a positive view on 2020 for both divisions and the group. And now I would like to hand over to Rainer to talk about the details.
Thanks, Joachim. First of all, also welcome from my side to today's call. I will go to the next slide on the presentation. Basically, we see that we had another very successful year, as Joachim just pointed out. Sales revenue rose by almost 15% to 1.827 billion in constant currencies. We also had strong performance of our order intake, reaching 1.9 billion in constant currencies, also an increase of approximately 15%. The strong top line really trickled down also to an underlying EBITDA of 495 million euros. It's an overproportional increase of 22.4%, and the EBITDA margin, or that translates actually to an EBITDA margin of 27.1%. Let's keep in mind, if you look basically to the left, to comparing it to 25.9%, there's a little bit less than 1 percentage points impact of IFRS 16, which is mandatory this year for the first time. Also want to point out that the acquisition that Joachim just mentioned, that we closed at the middle of December of Biological Industry, really had only a very marginal impact on the figures, which can, to be honest, neglected for all purposes of discussing 2019. If we look at the next slide and have a view on the regional sales split, we really see double-digit growth in all geographies. In the Americas, we were able to increase revenues by 17.4% to 630 million euros, really fueled by BPS, double-digit growth, and also LPS was a strong performance in this market. In the EMEA region, we were able to increase revenues by 11.2%, despite on the laboratory products and services division being affected by a softer economy. Remember, throughout and especially in Q2 was a quarter that was unexpected low and therefore really had an impact on the overall performance. And the Bioprocess Solution had also considerable growth in the EMEA region in 2019. Asia Pacific, again a strong year, 17.4% increase in revenue to 463 million euros, fueled again double-digit growth on bioprocess, and LPS grew slightly, but there we also have to take into consideration we had quite significant comps that we were faced with in that area. If we have a look on the divisional development, Bioprocess Solution, really strong demand across all regions, as I outlined, double-digit growth everywhere and throughout all product categories. Very happy there with the development of the division order intake increased by 18% in constant currencies to 1.479 billion, also driven by a dynamic project business. Sales increased by a little bit more, by 18.1% in constant currencies to 1.372 billion, and that despite the effects actually that we saw throughout the year, and that was an increased effect throughout the course of the year regarding the loss of certain media revenue. Keep in mind that at the end of 2018 we modified the agreement with Lonza, and the at that time projected growth impact, where we quantified it by around 2 percentage points, actually was already in line with slightly below 2 percentage points growth. That cost us in this year on the growth. Nevertheless, 18.1%, very good performance overall. Strong revenue growth trickled down also over proportionally to the EBITDA, increased by 24.5% to 406.8 million, which an increase of the margin by a good percentage point to 29.6%. Also keep in mind that not only economies of scale, but also there was a windfall effect of the application of our IFRS 16. On the next page, when we look at the laboratory products and services performance, clearly can characterize as a robust performance in a challenging economic environment. The economic environment dampened our growth on the order intake and sales side, especially in MEA and Asia Pacific. As I mentioned in Q2, that was really weak. If we look at actually Q1, Q3, Q4, there the growth rates were really between 6 and 9%. So actually in our expectations was really the Q2 that was flat. So on the order intake, nevertheless, we're able to increase by 5.7% to 460 million. And the sales revenue, we could even add a bit more, 5.9% increase in constant currencies to 455 million euros. The growth was also fueled by the very good bioanalytics or a strong momentum on the bioanalytics side, specifically in specifically in Americas and Europe, where due to a change of the distribution channel in China, we saw actually a decline in the business, which we will recover from though in the current year. So we expect a lot better performance in that region in 2020. The underlying EBITDA margin was able to increase from 18.5% to 19.6% to 89 million. Again here, slight positive impact due to the IFRS 16. If we look at some key financial figures on the next page, we see a very strong improvement on the operating cash flow, mainly driven by the strong performance of the EBITDA. Financial result increased slightly, but within our expectations, to 32.5 million. The extraordinary items amounted to 28.4 million. Keep in mind in the comparable that actually in 2018 we had a large positive effect due to the cancellation of a liability to Lonza, which was a result out of the modified agreement. In addition, we have the operating cash flow, one effect that we introduced a factoring program at year end, which contributes 37 million. That is also reflected in the 377 million. So strong performance cash flow, 54% increase year over year. Happy with that. On investing cash flow, amounted to 269 million. Keep in mind though here that we have the acquisition of BI is included in that figure. The capex ratio, which since the beginning of this year we are basing on cash flow, the ratio is now 12.3%, so right in line with our expectations that we communicated throughout the year. Capex also decreased, of course, as we mentioned throughout the quarters, due to the completion of several larger projects. If you go to the next page, we see our equity ratio. As of December 31st, 2019, 38%, slight decrease, mainly driven also by the application of IFRS 16, which increases the balance sheet sum. Net debt and absolute values slightly increased to over 1 billion, but the key performance indicator, which for us is the net debt divided by underlying EBITDA, we're able to improve to 2.0, so we're happy to reduce that. And with this, I'll hand back to Joachim to comment on the outlook.
Yeah, thank you, Rainer. So for 2020, we expect quite a significant top-line growth again, and also a further increase of our profitability. For the group, we expect 10 to 13% of increase of sales revenues in constant currencies, and an increase of the underlying EBITDA margin to approximately 27.5%. For Bioprocess Solutions, the set of figures is 11 to 14%, respectively 13% approximately for the EBITDA margin, and 7 to 10% top-line growth for LPS in constant currencies, and approximately 20% of EBITDA margin. Within this figure is the expected non-organic contribution by Biological Industries. You see in the first bullet point that we expect 1 percentage point of contribution coming for BPS and 2.5 percentage points for LPS. I will talk about that in a minute when I give you an update on the acquisition of Biological Industries. And for the group, this is then 1.5 percentage points. We don't have any non-organic contribution in here coming through the expected closing of the acquisition of certain businesses from Danaher. I come to that also in a minute. We expect the capex ratio to further go down, as we announced already a while ago that we expect this curve here. We expect approximately 10% for 2020, and we are happy being able to say that if we achieve this set of figures for 2020, that we then will have fully matched and achieved the midterm guidance that we have given 8 years back, based on our 2011 figures back then, and that was mainly the 2 billion euros of sales revenues for the Sartorius Group. So as said before, I now would like to talk a little bit about the Biological Industries acquisition. Next page. So just as a reminder, Biological Industries is a developer and manufacturer of cell culture media. It's specialized and very well positioned in the quite young and upcoming field of advanced therapies, or very often you would also say cell and gene therapies. It's headquartered in the north of Israel, close to Haifa. 130 employees, mainly employed in Israel. Sales revenues last year between 20 and 25 million euros. Healthy growth profile. Compared to the profitability of Sartorius, a slightly dilutive EBITDA margin, which explains to some extent the not too high increase of the EBITDA margins that we expect for 2020, just as shown before. And we will allocate approximately half of the business in 2020 to each of our divisions. That is mainly because there is roughly half of the business really with media that are used in research. Those we will allocate, or this business we will allocate to LPS. And those media that are used or will be used for manufacturing, we allocate to the Bioprocess Solutions division. As the acquisition from a technical and legal standpoint has been made through Sartorius State and Biotech within SSB, you will see that in a few minutes when we walk you through those figures. The entire effect of this acquisition will be shown on that level as well. But on the group's level, there is this allocation to the two divisions. Closing was just mid of December, so really a neglectable impact on the 19 figures. Rainer talked about that before, and the purchase price was around 45 million euros for just a little bit more than 50% of the shares. Agreements in place to possibly increase our shareholdership within the next couple of years. And the strategic background, of course, is that we wanted to build up an fully owned cell culture media business after the exclusivity has been removed from the agreement with Lonza. So this is about having an own portfolio and building also up own manufacturing capacities in the future beyond the one that we now already have in Israel. On the next page, I would like to give you a quick update on the acquisition of certain life science assets from Danaher. As announced around the 20th of October last year, this business we expect to, or this transaction we expect to close in Q1 2020. More precisely, we now expect this to happen rather around the end of Q1, because this transaction, as you are aware of, is subject to antitrust approval in the context of Danaher's acquisition of the GE Biopharma business. This is an ongoing process, moving ahead well, but yet is quite a time-intense process. So therefore, we expect this to happen rather around the end of Q1. The transaction includes businesses for both divisions as well, pretty much also 50-50 from a sales revenue perspective. It includes the bioanalytical tools business. According to our vocabulary, it's pretty much protein analytics, the Forte Bio business from PAL or Danaher, as well as predominantly downstream technologies, also a little bit of upstream technologies that would be added to the Bioprocess Solutions division, mainly chromatography business. Purchase price that we agreed upon has been $750 million US, and the allocation will be approximately 75% to be allocated to the lab division and approximately 25% to Bioprocess. All the precise effects on our 2020 figures, or the guidance that we will give for 2020, of course, depend on the exact date of closing, and therefore we will specify and update our guidance then upon the closing date. I would now like to walk you also through the figures for Sartorius Biotech. And of course, these are very much in line with the Bioprocess Solutions figures from a divisional perspective within the Sartorius group. So 17% of top line growth we could achieve and have closed at 1.44 billion euros of turnover. Order intake 1.54 billion, 16.2% up from 2018. Proportionate increase of our underlying EBITDA to 421.5 million. This is an increase of a good 23%. EBITDA margin expansion by 1.1 percentage point, so that we are at 29.3% here. Underlying earnings per share up by almost 20% to €2.85. I think we talked about that before, that this has been really driven by a very strong growth throughout the board from both the product perspective as well as from the regional perspective. BI did not have any significant impact. We said that before, and Rainer also talked about the impact of from IFRS that we also announced a year ago already to be the case in this or in the last year. On the next page, you see the growth that we have achieved in the three geographies. The picture is almost the same as shown for the group, but yet with particularly Asia Pacific being even stronger, with close to 24% increase in constant currencies, and 13% for EMEA and 17.1% for the Americas. Pretty much for the Americas in particular, we have to say really strong comms, high comms, so really strong development here, but also for EMEA and Asia Pacific. I think this has been a successful year with really healthy top line growth. Cash flow also for the Sartorius State and Biotech Group, most of the statements that have been made for the Sartorius Group are relevant here as well. So the strong underlying EBITDA and the respective increase here has led to a significant increase of our operating cash flow. We also have seen some impact by the factoring program. You see that in the bullet points on the right-hand side. The fact that the extraordinaries 2018 have been strongly positively impacted by the change of the contract with Lonza, I think is known to you, and of course play here on the SSB level a role, as well as the significant decrease of our capex ratio that came in as expected and announced a year before. For the key figures from a financial and balance sheet perspective, I think can be said that this is a very strong position, around 65% equity ratio, just 0.3% net debt to underlying EBITDA, even though we are still investing or have invested on a quite significant level, plus close this one transaction, so further decrease on that level, so very robust position. So, and then finally, without repeating the details on the two acquisitions, the one that we closed, the other one that we announced and hope to close relatively soon, here now the outlook for 2024 Sartorius State and Biotech. Top line growth 11 to 14% we expect here, but here as we consolidate the entire BI business, as I said before, the non-organic contribution to this top line growth we expect to be around 2 percentage points, and the profitability is a little bit stronger impacted because of this dilutive effect from BI, so that we expect the margin around 29.5% here, and a decrease of the capex ratio to around 8% for Sartorius State and Biotech. Also here, one can clearly say that we are very well on track to achieve the midterm guidance that we have set and communicated 8 years ago. So that would it be from our side so far, and now we are happy to run a Q&A. Thanks.
Ladies and gentlemen, at this time we will begin the question and answer session. Anyone who wishes to ask a question may press star followed by 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star followed by 2. If you are using speaker equipment today, please lift the handset before making your selections. Anyone who has a question may press star followed by 1 at this time. One moment for the first question, please. The first question comes from the line of Patrick Wood with Bank of America. Please go ahead.
Perfect. Thank you very much for taking my questions. I have 3 quick ones if I can, please. The first would be within BPS. I'm just curious where you guys are seeing, from your perspective, the greatest demand profile and changes there. And what I mean by that is, like, how's the demand structure in the CDMOs looking relative to in-house? I mean, you mentioned a little bit before about, I think it was last call, about CDMO capacity running reasonably high. I'm just curious to get a little bit of color on the BPS demand by sort of rough customer there. That'd be great. The second one would be, and apologies if you mentioned this already on the call, but the factoring program, I know it's very small, but I'm just curious as to some of the background to that and whether that was something that was new. Apologies if not. And then the very final one, we've had obviously some of our companies since Biogen refiled, obviously talking about aducanumab and capacity within the industry. If we do get a success on that side and longer term with Alzheimer's, I'm just kind of curious how you feel about capacity across the industry if we did get some kind of a solution, whether that's aducanumab or something else, just whether that would result in any kind of incremental demand. Thank you.
Yeah, thank you very much for your questions. I will answer question 1 and 3, and then Rainer will answer the question 2 on factoring. So we have to say that we have seen pretty much a balanced demand from the different customer segments. You mentioned CDMOs or in-house in particular. We could also add maybe similar manufacturers to this. Of course, the relative increase over the last couple of years has been the strongest for biosimilar manufacturers, as this is a quite new segment of the overall market. But we clearly have also seen significant investments by a couple of originators, and then clearly also by CDMOs. So I always would hesitate, or we would hesitate to say, well, it's mainly CDMOs or so, because we really see quite different business models on our client side. Of course, maybe a lot of people would say that there is a certain trend towards outsourcing, but I think you also see some players doing it a little bit the opposite, and the percentage of outsourced manufacturing hasn't increased that substantially so far, even though clearly this is a nicely growing segment without any doubt in the moment. So well balanced, I think, is the fairest answer on that. The question regarding capacities, and you gave one example, what could drive a sharp additional increase in demand. That's a very good question, and I clearly would say that there is a reason to expect that the capacities will be further increased in the next couple of years, as we have seen it also over the last few years to quite a significant extent. But I would not at the same time say that there is a short-term capacity shortage or so to be expected. Of course, that is always quite difficult to judge, because it's not such. We don't have a situation where there is a complete and very transparent knowledge about all available capacities, and also in how far such capacities would be flexible enough to be used to fulfill the demand. But overall, I would say there has been quite significant investments into capacities over the last a couple of years, plus the fact that single-use technologies are extremely powerful when it is about building up capacities in relatively short time. So we are positive about the future capacities demand, and we do not at the same time expect any significant capacity shortage. Question 2, Rainer?
Yeah. So regarding the factoring, so for 2019, basically the 37 million, it's really part of the diversification of our financing structure. It's another solid way. We actually used to have factoring in the past. Until 2014, we ran a factoring program. Throughout 2020, you will actually see an increase of the factoring volume, but it's purely out of diversification and an additional financing source, since we have a very attractive accounts receivable portfolio.
Very helpful. Thanks, guys.
The next question comes from the line of Michael Leuchten with UBS. Please go ahead.
Thank you very much. One quick follow-up question. Could you provide us with the percentage of your portfolio that is now in biosimilars, given your commentary around CDMOs, in-house, and biosimilars? That would be question number one. Question number two, just on the FTC process. So obviously you're closing the Danaher asset acquisition is subject to what happens with the FTC review of the bigger deal. But how do you see that happening? Is that a sequential event, or can you actually work on things in parallel to close that as quickly as possible? So when you say end of Q2, is that Q1, is that you think you can get everything done by that point in time? And then third question, on BPS, it looks like in EMEA in Q4, BPS dropped into the single digits growth. Is that just a base effect, or is there anything else going on? Thank you.
Yeah, thank you for those questions. So biosimilar is around the 10% mark now, we would say. Maybe as a recap, of course, at this point still influenced by a substantial piece of systems business or equipment business, because very often we are talking about first-time investments into capacities. So that plays a certain role. Percentage would be a little bit low if we would just talk on about consumables. The FTC process you mentioned, or the antitrust process. It's of course the FTC as the authority for the US, but then of course also the European Commission for Europe, and also China plays a role. So all these processes are running to some extent in parallel, but also not exactly on the same timeline. So therefore, we expect the approvals not to come in exactly at the same time, but the closing of the transaction, that will happen at one point in time. It's not possible for several reasons to make a sequential closing, if that was the question, like closing in Europe and closing then in the US 3 weeks later or so. That wouldn't work. So the closing as such will be at one point in time, and therefore you could say that the last approval to come in is therefore triggering then this event. BPS, pretty much high comps from Q4 2018. Nothing specific. We are very happy with our performance in EMEA.
Thank you.
The next question comes from the line of Marcus Gola with MainFirst. Please go ahead.
Yes, thanks for taking my questions. So my first one is related to the coronavirus. It seems that you had a financial tailwind during the outbreak of H1N1 back in 2009. Could you remind us what products have been driving that, and maybe also the magnitude of the financial tailwind back at the time? And is it fair to expect that there's some upside to your guidance if the coronavirus reaches the same case volumes like the flu pandemic back in 2009? And my second question is related to the pending acquisition of the Danaher assets. It seems that some antitrust authorities might demand further divestments before they grant the approval for the Danaher GE deal. So would you be willing and financially able to buy additional assets if these become available on the market? Thank you.
Yeah, thank you very much for these two questions. So, you're right. 10 years ago, we have seen as you said, additional tailwind coming from the outbreak at that time. We quantified that to be approximately 2 percentage points. I think what has to be taken into account is that the effect in absolute figures in all theory could be of the same magnitude, but then the relative impact would be significantly smaller, as we have grown substantially over those 10 years. So I would say maybe the very best, very theoretical guess at this point is that absolute impact may be the same, but please maybe, and then the relative impact very likely below 1 percentage point. Pure math would maybe say half a percentage point. So, but yeah, again, very theoretical at this point. And we're asking for what has driven that. Well, we are quite well positioned as a supplier of the manufacturers of flu vaccine and also other vaccines. And the products that our customers are using are pretty much across the board. But of course, we are talking about single-use products here. Otherwise, it wouldn't be impacted by any additional manufacturing campaign. So it would be pretty much filters, some bags, etc. And then you were asking for about the speculation whether the remedy package that Danaher might have to invest, or the additional products that would have to become part of the remedy package, whether we would be able to acquire those. Also here, I think it's a bit a speculation at this point. I would say that nevertheless, it's quite likely that given our positioning in this industry, that there would be a fit and some complementarity for such products, so that we would be a suitable purchaser for such products also, and be a potentially very competitive company to continue such products on the one hand, and I also don't expect at this point the potential additions to a remedy package be of a size that this would stretch our financial limits at all. So we don't have any concerns here.
Great. Thank you.
The next question comes from the line of James Quigley with JP Morgan. Please go ahead.
Hi, thanks for taking my questions. So the first one's on the order intake for the BPS division in the second half of the year. It was a little bit lower than the first half. So can you talk us through these dynamics and to what extent the slowdown is concerning, or is it more due to the base effect or timing effects? The second question is on the guidance. So for both of the divisions of BPS and LPS, can you take us through the pushes and pulls for the top and the bottom end of the ranges? And in the past 2 years, for BPS particularly, you've increased the guidance by 4 or 5 percentage points at the half year. So to what extent is that guidance potentially conservative as you've given it now, or were those two upgrades due to specific events that may not happen again this year? Thank you.
Yeah, thank you for these two questions. So for the difference between H2 and H1, you can basically say that the development is, I would say, pretty much in line with what we would have expected. When you compare the quarters in 2018, you see that there was indeed Q4 quite strong, so comps were relatively high. On the other hand, we also have seen a healthy performance in Q4 as such. Therefore, maybe the main point really was that Q1 and Q2 was a positive surprise, and that also has led us to increase the guidance for 2019. And as we said back then, when we did that half a year ago, this was very much because of a number of larger projects that have led to additional sales revenues in 2019 already, but will partially also spill over into 2020, but of course against this higher comps. So the guidance that we have given for 2020, we believe is not too conservative. I mean, we are talking about significant top line growth again, 11 to 14%, after a very strong increase during 2019. The profitability guidance, to some extent, of course, has to be seen in the light of the higher level, where further increases naturally or mathematically are becoming smaller. Secondly, then just the topic that I touched upon, the certain portion of project business still in because of the high order intake that we have received from that part of our product portfolio in 2019. And thirdly, then the certain dilution, that's not a big impact, but still from the BI acquisition that we expect to play a role during the first few years after integration. So I think it's not a too conservative guidance for 2020.
Excellent. Thank you very much.
The next question comes from the line of Scott Bardo with Berenberg. Please go ahead.
Yeah, thanks very much for taking my questions, guys. So first question just relates a little bit to how you see phasing over the course of the year. I appreciate that the first half of 2019 had particularly strong underlying performance in Bioprocess Solutions. Does that signal in your mind that you're likely to start a little bit below the BPS guidance framework, or is that something you're not willing to really call out at this point? Just following on from the question on guidance, Dr. Kreuzburg, I appreciate that you always try as a company to tell it pretty straight and how you see it. But just with reference and your experience running the company as compared to previous years where you've upgraded Bioprocess guidance, how would you characterize this year with respect to upside or downside surprise to your guidance? Is this sort of a normal year where things could be better than expected, or is there reasons to be a little bit more cautious as compared to prior years' error bars around guidance? Thank you.
Thank you, Scott. I appreciate your creative ways of asking this question. So phasing, good point. I mean, we do not have such seasonality in our business, but of course we do see every one and then a bit stronger quarters, and therefore slightly different patterns, not huge fluctuations in the portions that the different quarters contribute, but then of course a certain shift can already make a difference of 1-2 percentage points in the quarter-on-quarter growth rate. So having said that, I would tend to say that indeed first half of the year 2019 was indeed quite strong. We also have seen in the first half of 2018 the effect from the change of our Lonza contract kicking in a little bit slower. That of course now will continue to show a certain effect in the first two quarters of 2020. So if at all, from today's perspective, and again, of course, we leave the closing of the Denner acquisition out now anyway, then maybe the tendency could rather be that growth in the first half is maybe a little bit lower than in the second half. But that already assumes that everything else is absolutely a straight line, and of course that is rather never the case. On the guidance being, or whether we are seeing ourselves now at the beginning of a normal year or less normal year, that is always difficult to say. I mean, we believe that in general the growth drivers in our industry all remain pretty much intact, pretty much on the same levels that we have seen before, and that is why we are expecting a significant growth even after such a strong year 19, which has followed a strong year 18. However, if at all, one could also say, well, the number of new drug approvals has been a little bit lower recently than it has been before. So there are also some figures, even though still on healthy levels, but if you would say, okay, is it rather adding momentum or maybe taking a little bit of momentum away, I think overall I could find reasons for both arguments. So and therefore we really believe that the guidance that we have given now for the scope that we can give guidance for at this point is a very fair one and a realistic one. And then let's see once we have the opportunity to update it after the closing of the acquisition of Danaher businesses.
Thank you. Always appreciate your thoughts. And maybe while sticking with the Bioprocess, just to understand a little bit from a product positioning standpoint. So obviously we see some quite aggressive investments from CDMOs around the world for capacity. So the question I really want to ask you is, Do you feel that your product portfolio is now well suited to these expansionary efforts? We see some companies with very high volume single-use bags winning business from some of these CDMOs, and I wonder whether that is something which is a focal point for the group. And similar question for arguably the more low volume end of the scale for cell therapies or gene therapies. Do you feel that you have the right portfolio to really capture those opportunities?
Yeah, very, very relevant perspective, I believe. So for CDMOs, I would definitely say that we have a very competitive portfolio, and I think the development of our business in that segment, as I said earlier, I mean, also we see this in other segments, for example, with originators, but nevertheless, I think it proves that we have a very relevant and attractive offering here. Of course, we will never stop looking for complementary additions to make our portfolio even more relevant, and also look for innovations, etc. So that's clear, but we believe that we are very competitively positioned here. Cell and gene therapy is, of course, a much younger field where I would say nobody yet has the portfolio that will make that segment a long-term, also economically sustainable success. Because our view is that these players are still looking partially for the right technologies, also to outscale, for example, their manufacturing when they have to parallelize the manufacturing of the different batches in relatively small volume. I think there is a certain demand of higher integrated systems or of higher automated systems. So I think this is an area where we definitely consider ourselves being well positioned. And the media portfolio from BI has added to our positioning here without any doubt. But yet, this is a field where further additions, further innovation for sure will be necessary. And we definitely want to be an active part of this journey.
Very good. And perhaps last one, if you'll afford me another question, just quickly on the LPS business. So I appreciate the guidance. If one were to strip out the acquisition, looks more like 4.5% to 7.5% growth with 40 basis points, 50 basis points margin expansion or so. That seems to be tracking below your medium-term aspiration, and arguably as was fiscal 19. So the question I really ask you is, has anything really changed in your business to make you address the outlook that you have on an underlying basis for this business?
I would say the underlying perspective is pretty much unchanged. What is right is indeed that we, particularly in 2019, but to some extent one could argue also before, that the underlying growth in Asia has declined over the last couple of years to some extent. And we also definitely by ourselves have further room to improve here. And as said before, we also expect that, particularly in the area of bioanalytical tools, for instance, we expect a substantial step up of our growth rate there this year. So I would say mostly unchanged view, but nevertheless you are right. We thought to be a little bit further than we are today, and I would say maybe if I take it from the regional perspective, than Asia maybe to some extent.
Very good. Thank you very much indeed.
The next question comes to the line of Paul Knight with Janney. Please go ahead.
Good morning and congratulations on the quarter. Joachim, can you talk about your capacity utilization, and then your capital expenditure plans relative, and also what's your maintenance capital expenditure normally relative to what your plan is?
So capacity utilization, of course, is different in different areas. After the substantial investments that we have made, though, I would say that in most areas where we are well below the 80% mark, and to be well below 80% is important because when you are growing, let's say, around the 10% mark, then otherwise you easily and quickly hit the 80% mark, and that is more or less the latest point in time that triggers already a further expansion of capacities. However, one area I would mention here that is a bit of an exception, and that is the area of systems and instruments. So when you think of bioreactors and such type of smaller and larger instruments, then this is an area that also has developed very, very nicely over the last couple of years across the board. So it starts off with the smaller systems like Amber 15 and then also Amber 250, so the highly automated multi-parallel small-scale fermenters, but also then the larger scale range of SDRs, so the single-use bioreactors for manufacturing use. And here we indeed will have to expand our capacity substantially in 2020. It's pretty much on top of our agenda in that regard. So maybe that gives you a little bit of more light and color regarding our situation there. On the maintenance capex, the concept of maintenance capex, of course, is always a little bit tricky. But we tend to say that, maybe first of all I should say that we have a number of 2.5% or so of capitalized R&D
yes.
in our capex ratio, so that we have to deduct first, and then if we look ahead into 2020, so we are talking about something, let's say, between 7 and 8, then on classical kind of capex. And here we would say that maybe something around the half of that would be maintenance capex if we had no capacity expansions to invest into, whereas the remainder, so somewhere 3 to 4 maintenance, 3 to 4 is expansion that we work on in 2020.
Thank you very much.
The next question comes from the line of Daniel Wendorf with Commerzbank. Please go ahead.
Thanks for taking my questions. 3, if I may. 2 on BPS, 1 on LPS. Starting off with the 2 BPS questions. The first one would be when I look at Q4 in particular, can you quantify the negative impact having come from the Lonza deal restructuring on your sales growth? My second question would be on BPS, and when you look at capacity expansions in the industry.
I'm sorry, we seem to have lost the line of Daniel Wendorf. Hopefully we'll dive back in. The next question, we have a follow-up from Scott Bardo with Berenberg. Please go ahead.
Yeah, sorry, Daniel. Yeah, thanks for the follow-ups. Just a quick question, a few questions, please. Again, with respect to coronavirus, interested to hear your thoughts, Joachim, on what you're hearing on the ground in China. Has some of the government-led initiatives to contain the virus outbreak led to any disruption in manufacturing capabilities or had any impact on Asian manufacturers that you're aware of to this point? Maybe you could share some thoughts around that. And also, I understand from some of your recent corporate communications that you're contemplating building a manufacturing plant in Korea to help serve Samsung Biologics. I wonder if you've made a determination on that yet. Thank you.
We would be not aware of any measurable impact coming from any actions of the Chinese government to fight against the coronavirus outbreak. We touched upon that earlier. If anything might come up here, it won't be most likely not that significant, but we would not be aware of anything yet. And on Korea, I'm not sure what kind of communication here has led to this misunderstanding. We are not planning to build any own manufacturing site in Korea. Korea is a very significant market for us. We are very well positioned, and we for sure will further expand also our presence in that market going forward, because we foresee almost similar growth rates going forward and growth potentials going forward in South Korea as in China in regards to growth rates. So that's clear, but so far we do not plan to build up any own manufacturing capacities in Korea.
Okay, thanks. That's very clear. Perhaps just one very quick financial clarification, please, from Rainer. Rainer, is it too early to give us a sense of what the minority payaway to Sartorius Stedim is from the parent? I think that this has been trending up somewhat disproportionately over the recent years as compared to bioprocess growth. And it's just useful to help value the two entities separately. So I wondered if you kindly share the minority expected for fiscal 19.
So basically, if I understand you correctly, the dividend that we're planning that SSB is giving to its parent SAG, is that what you're referring to?
The minority payaway to Sartorius Stedim for the part of the business you don't consolidate, or you don't own, rather.
At the moment, actually, we do not disclose that because that has to go through the shareholding assembly first, because that is really the body that then basically defines what the dividend will be, and then we know exactly what is going to come up to Sartorius AG.
Okay.
If that answers the question.
Okay, we need to wait. Okay,
or is it But maybe, Scott, maybe one other aspect, because I mean there are a lot of figures available. I think what you can see is over the last couple of years that the increase of the dividend payments for both the Sartorius Group as well as for Sartorius Stedim Biotech pretty much has been on the same level, so that the payout ratios on both levels have been pretty much the same. And if you do the math and calculate the net payout of Sartorius AG, so the gross payout of Sartorius AG, and then the income that Sartorius AG receives from the dividend payment from Sartorius Stedim Biotech also has stayed pretty much on the same level. So I hope that clarifies that. Going forward, dividends for 2019, no decisions have been taken yet, even what to propose to the shareholder meeting, not to talk about the decisions by the shareholder meetings, of course. Okay?
Thank you very much. Appreciate it.
Daniel Vendorf has dialed back into the call, so the next question is from Daniel with Commerzbank. Please go ahead.
Yes, hi again. So I hope my question arrives this time. I was kicked out of the call for whatever reason. So I start one by one. First question on BPS. When I look at Q4 in particular, can you quantify the negative impact which has come from the Lonza deal on your sales growth? And that would be my first question.
Okay. So the answer is around 4 percentage points in the single quarter 4.
Okay. Very good. Very helpful. Thank you. My second question would be, when you look at capacity expansions in the industry, can you quantify the level of single-use components being included in these production chains, maybe compared to the existing base?
That's always a tricky question that would require quite a lengthy discussion about definition. But what one What we would say is that for filters, the penetration rate is since quite many years 100%. So in all biomanufacturing sites, all filters that are used are single-use filters, but that is already the case since many years. So no change between, or no difference between newly installed capacities and older capacities. It's a bit different for what we call fluid management technology, so bags. Here, what we have seen is over the last couple of years that more and more applications have been penetrated by single-use technology. So it started 15, 20 years ago with simple applications like transport and storage, and now you see pretty much all other possible applications like mixing, etc., also being penetrated by single-use technologies. So we would consider the actual situation being around penetration to being 2/3 when it is about newly installed systems, and we would consider that going also up to 100% within the next 5, maybe 5+X years. And when we see the entire scope of installed capacities, maybe the penetration rate is around 30%. And when we talk about then fermentation, and that would be maybe the last segment that I address here, then this current penetration would be maybe around 5%, simply because there are still many stainless steel capacities in operation. Current penetration of new sales, I would say, is for sure 30% now. Rather, this is a figure that really has increased very significantly over the last couple of years. It started off with a significant penetration into process development, and even when it was starting to become the dominant technology in process development, still some new installments were stainless steel, because that is when those projects had been kicked off. But now for sure I would see around 30% and increasing, so that we would expect within the next 5+X years this figure to be also around, let's say, 75% or so. So we are still in a very interesting transition in some areas.
Okay, thank you very much. And my last question would be on the LPS revenues going into the different industries. Can you potentially quantify what the growth rates were in 2019 when you look at your sales with different target industries like bioanalytics or even the chemical industry? That would be very helpful. Thank you.
Yeah. So what we typically would disclose here at this point is that roughly half of our revenues in the lab division goes into what we would call the life science segment. That is academia, but also, of course, life science or biopharma industry quite often. And then the other segment, what typically is called, and we also call it like that, applied research, but also some quality assurance labs in some industries like chemical also then make up for the other 50%. And clearly, the growth rate in applied has been lower than in life science. It can be quite different in the different industries. I think it's no surprise that the chemical industry has been a little bit more challenging last year than maybe food industry, which hasn't been that bad. But overall, you can clearly say, and when you've seen an overall growth of around 6% for the division, then you can imagine that in the life science segment, growth is, let's say, around the 10% mark, even though not all of that is bioanalytics, whereas growth in the applied segment has been relatively low last year.
Okay, very helpful. Thank you.
You're welcome.
There are no further questions at this time. I hand back to Dr. Joachim Kreuzburg for closing comments.
Yeah, just briefly, thanks a lot to everybody for participating in our call and for your continued interest in Sartorius. We appreciate that a lot. I'm sure we stay in contact through investor relations and at different conferences within the next couple of weeks. And then we will for sure have another call on Q1 and maybe earlier if there are any news on some of the projects we are working on. Thanks a lot again. Have a great day. Talk to you. Bye-bye.
Ladies and gentlemen, the conference is now concluded and you may disconnect your telephone. Thank you for joining and have a pleasant day. Goodbye.